Good afternoon, friends. Important video on recommendation of 54th GST Council meeting held on 9th of September 2024. I'm going to discuss in four broad categories. The first category would be two group of ministers are being formed. Second, I'm going to discuss the GST rate changes which is being recommended on goods or services. Third category, trade facilitation measure. And fourth category, the other one. So let's start with, I'm starting with the third category. What are the trade facilitation measures which is being recommended in 54th GST Council meeting? I'm sharing the document so that we can correlate the discussion, and this document is being created with the press release issued on 9th of September 2024. Let me share my screen first. So this is what the third category which I was referring to, that measure for facilitation of trade, the first important one. You know that section 128 capital A is now the part of Finance Act 2024 and part of CGST Act. What is this section 128 capital A? It is providing complete waiver of interest or penalty or both together for three initial financial year, 17-18, 18-19, and 19-20. If it is being paid, tax demanded amount is being paid. And the three categories they have created, which are covered for section 128 capital A, that so-cause notice is being issued under section 73 non-fraud case, and original order is not being passed. Original order is being passed, you have filed the appeal, and the order in appeal is not yet passed. Second category. Third category, order in appeal is being passed by first appellate authority, and you are supposed to file appeal before GST 80 appellate tribunal, which is not yet formed. All three category cases are being covered. There would be no interest, no penalty. Only condition that demand is raised under section 73, which is non-fraud case, covering non-payment of tax, short payment of tax, ITC wrongly availed or utilized, except erroneous refund. And these three categories are being covered. As per section 128 capital A, the point was that demanded tax amount must be paid by a date to be notified. And now GST Council has recommended that date would be 31st March 2025. 31st March 2025. And the section 128 capital A going to be notified from 1st of November 2024. So demanded tax amount to be paid by 31st March 2025. There were many queries, and you'd be thinking what would be the answer of those queries. Could be the one, you may have paid the tax demanded, only dispute lies with interest or penalty. What happened to that? Second, if I'm going to avail this benefit, then of course section 128 capital A clearly saying that you need to withdraw all litigation, either before appellate authority or if it is pending in any high court. What would be the procedure and mechanism? Third question could be, and there are so many, I'm just creating for sake of an example, that what happened if any demand is being raised under section 74, which is fraud case. Of course, section 128 capital A permitting that if such demanded amount under section 74 is being sent back to the proper officer to consider under section 73, either by High Court or appellate authority, those cases are being covered. Even in case of revision of any demanded amount because of appeal filed by the revenue department, it may happen that you got a favorable order, taxpayer got favorable order in their favor. Revenue has filed appeal against such order and that is pending. Whether that is covered? Yes, covered. And with a condition, if this demanded tax amount is being revised, then we must pay the revision, that revised amount within 3 months from the date of the revision order passed. So that is how the, section 128 capital A going to be notified from 1st November 2024, and demanded tax amount must be paid by 31st March 2025. What happened if I paid the demanded tax amount prior to this notified date? So lot many. And for that, this recommendation is saying that they are going to insert a rule 164 in CGST rules 2017. So rule is going to be inserted along with certain forms providing for the procedure and condition for availment of benefit of waiver of interest or penalty or both for initial 3 financial years 17-18, 18-19 and 19-20, meaning thereby a detailed mechanism, procedure and conditions is going to be notified along with the rule 164, how this section 128 capital A going to work. And they have said this date that you must pay by 31st March 2025. And now the section got notified from 1st of November 2024. So this is the first recommendation as a trade facilitation. Coming back to the second point. Second point was, you know that section 16, subsection 5 and subsection 6. What is this section? Section 16, subsection 5 is providing a relief to all taxpayer whose credit, GST credit, is barred by limitation under section 16, subsection 4. So what was the provision? For initial 4 financial year, 17-18, 18-19, 19-20 and 20-21. And the provision during those 4 financial year was earliest of due date of furnishing return under section 39, which is GSTR 3B, for the month of September following the end of relevant financial year. So by default, it is 20th October for filing 3B, or due date of furnishing annual return 31st December, whichever is earlier. But now section 16, subsection 5 is providing with the retrospective date from July 1, 2017. If your credit is barred by limitation, then you will be given the credit. Benefit of credit would be given to you. Only 2 things you have to keep in your mind. You must have availed credit through GSTR 3B, and 3B must have been filed by 30th November 2021. 30th November 2021. So we were all waiting that this section, when it is going to be notified, right? So they are recommending that they will soon notify And they will also provide the mechanism, the procedure, how you're going to avail such credit which is being disputed either by way of so-called notice or impugned order is being passed, or your matter is pending before the first appellate authority. So they're going to provide you all procedure and mechanism. Under section 16, subsection 6, when taxpayer registration gets cancelled, then we have seen the situation that he is not being able to file his 3B, and thereby his credit gets barred by limitation under section 16, subsection 4. So section 16, subsection 6 provide a mechanism to avail such credit. And there are two situations. First situation, if 30th November of succeeding financial year relevant to that financial year for which you want to avail credit, if that date is open to you, then you must file all your return from cancellation date till revocation date. If 30th November is open of succeeding financial year, this is the first situation. Second situation, if this date has passed away, so this date is no more available to you, then they are giving special window that being a cancelled dealer, once your registration which got cancelled is being revoked, you must file all your return within 30 days from the revocation order for the period cancellation till revocation. So that is what the special provision under section 16, subsection 6. So what they are saying that these two sections, which is the part of CGST Act, now they are going to issue a circular to clarify the procedure and the various issues related to implementation of said provision of subsection 5 and subsection 6 of section 16 of CGST Act. This is what they have explained and recommended, and this date they will notify everything. Coming back to the third important trade facilitation measure, try to understand these are the facilitation which is being recommended. So what is the third one? They are saying there would be amendment in Rule 89. What is Rule 89, by the way? Refund of ITC, input tax credit, whenever we undertake zero-rated supply. And zero-rated means supply to SEZ unit or developer or export of goods or services. And Rule 96 of CGST rule, which talks about IGST refund on zero-rated supply. So these are the two relevant rules. And to provide clarification in respect of IGST refund on exports, we have benefit of concessional stroke exemption notification, either concessional or exemption notification specified under Rule 96 Sub-Rule 10 of CGST Rules 2017 has been availed on inputs. You will better understand, and I'm reading this next paragraph, which is very much provide the clarity, and I'm having some observation which I will share with my viewers as well. The GST Council recommended to clarify, so they are going to issue a clarification where inputs raw material were initially imported without payment of IGST and compensation cess. By availing benefit under notification number 78/2017 custom or notification number 79/2017 custom. So you must be knowing advance authorization, right? Under advance authorization, you are allowed to avail this exemption that you can import raw material without payment of IGST and compensation cess. So if you have done so, but IGST and compensation cess on such imported inputs are subsequently paid. When you initially imported, you didn't pay, but subsequently you have paid IGST along with applicable interest, and your bill of entry in respect of import of said inputs is got reassessed through jurisdictional custom authorities to this effect, then IGST paid on export refunded to the said exporters shall not be considered to be in contravention of provision of sub-rule 96, sub-rule 10 of rule 96 of CGST rule. In simple word, there was restriction under rule 96 sub-rule 10 that if you avail the benefit of this exemption notification, like input imported without payment of IGST and compensation cess, which is meant for manufacturing and exporting goods, then you're not allowed to export on IGST. There was restriction. But let's assume you have exported on IGST. You have exported on IGST. So this is not permissible, but what now you can do when you have exported on IGST, you can get your original bill of entry through which you imported the raw material and avail the exemption. You get them reassessed, pay the IGST and compensation cess as applicable along with interest. Then they are saying that refunded IGST refunded to the said exporters shall not be considered in contravention. So they are going to clarify this part. So all past dispute, they are going to clarify that if you have taken IGST refund, which was otherwise not available because you have availed the exemption benefit, exemption notification benefit, but you have made the correction, you got original bill of entry reassessed with the payment of IGST and compensation cess as applicable along with interest, then that particular restriction will not be considered in contravention of Rule 96 sub Rule 10 for the past period. So laudable step, the first one. So they are going to clarify. Further, what they are saying, this is important one and must pay attention. This document is visible to all my viewers. I'm also increasing the size so that it is better visible to all the viewers. Further, considering the difficulty being faced by the exporter due to restriction in respect of refund on export. So exporter, we are having problem that their refund was restricted by this rule 96 sub rule 10, rule 89 sub rule 4A and 4B, which is refund of ITC. In cases where benefit of specified concessional and exemption notification is availed on inputs, the council recommended to prospectively, now they are going to prospectively omit Rule 96 sub Rule 10, which is putting a restriction on payment of IGST condition, Rule 89 4A, Rule 89 4B of the CGST rules. So way forward, you can export on IGST. Only condition that you should have paid IGST and compensation cess, if applicable, on import of raw material inputs. Then you are allowed. This restriction is going to be done away with, but prospectively. This will simplify and expedite the procedure for refund in respect of such export. There's a third facilitation measure. Coming back to the fourth one. They're saying they're going to issue a clarification through circular to remove ambiguity and legal dispute in certain issues. So certain issues they have picked up and they are saying they are going to issue a clarification through a circular. The first one, they are going to provide clarification on the place of supply of advertising services provided by Indian advertising companies to foreign entities. But why this dispute? Let me tell you the background of it. There are Indian advertising company, let's say in Mumbai, and they have contract with the foreign company, foreign brand, and they are undertaking advertisement for that foreign company of their brand, which get published widely in India and outside India. Question and dispute which is prevailing in the trade as on date is, even though it might be related to Indian operation, that advertisement, because that product of foreign company is also being sold out in India, can we say that place of supply is not location of recipient? As per the provision, as per section 13 of CGST Act, it is location of recipient. So location of recipient of foreign company is outside India. Place of supply is outside India. In that case, it should be termed as export of services. Why dispute? Maybe some portion of advertisement relate to Indian, that Indian market. Of course, their products are being sold into Indian market, but these advertisement is being undertaken under a contract for a foreign company for their advertisement, wherein also that product gets advertised in India and worldwide. They are saying we are going to provide the clarification. And they are saying that place of supply would be location of that foreign entity. So this is what the clarification. I've given the background to you. Second, the demo vehicle, the big disputed one, divergent advance ruling. You're a dealer of Maruti, let's assume, and you got one demo vehicle, and that demo vehicle is being used in the course or furtherance of business. Dispute was whether credit is available or not available. At least it is being considered by GST Council, and they are saying, yes, we are going to issue a clarification regarding availability of ITC on demo vehicle by dealer of the vehicle manufacturer. We have said in the past, it is in the course of furtherance of business, credit should be available. Fortunate, this clarification will come. But again, the question will come, this circular going to be issued, let's say any date. We are standing on 10th of September when I'm recording this video, of recommendation made on 9th of September 24. Let's say circular gets issued, let's assume on 15th of September. Will it cover the past period? This dispute may come. I can tell you any circular which is providing clarification can also be applied retrospectively. So that would be my legal way to look at those circular, providing clarification. And we were debating legally, saying that this demo vehicle is in the course of furtherance of business. Coming back to the third one, they're going to issue a clarification on place of supply of data hosting services. So data hosting services provided by service provider located in India to a cloud computing service providers located outside India. And IT is becoming a great phenomenon and a hub. India is hub for that. Lot of data hosting services are being provided from India to a cloud computing service provider located outside India. So what would be the place of supply? They're going to clarify the same. And depending on that, you will treat the transaction whether export or chargeable to GST. To my mind, again, as I said, if we are giving to the cloud computing service provider located outside India, we have to understand from that perspective. Council is also going to recommend amendment in some other provision of CGST rules 2017. They have not said what they are going to do, but this is what the press release talks about. Other major. We all know about B2B e-invoicing, taxable supplies, B2B. And present limit is 5 crore rupees, aggregate turnover exceeding 5 crore rupees in any preceding financial year starting from 17-18. If a supplier, his aggregate turnover exceeds 5 crore in any preceding financial year starting from 17-18, and this 5 crore got started sometime from 1st August 2023. It is only B2B tax invoices, zero-rated supply, and debit note and credit note. Now they are saying that we are going to roll out a pilot project for B2C e-invoicing. So B2C means a registered supplier to unregistered recipient. So they are going to roll out the pilot project B2C for e-invoicing, depending on the success of B2B invoicing. Further, they are saying that this is going to be on voluntary basis. So they are not going to make it compulsory. It is only for selected sectors and state. So voluntarily to start with. But way forward, of course, they are going to cover this B2C invoicing. Coming back to the second line item, invoice management system and new ledgers. I do not know whether you heard of invoice management system, but very interesting one to have reconciliation of GST input tax credit. When invoice is raised by the supplier, recorded in his outward supply statement GSTR1 as amended by GSTR1A, getting auto-populated for the recipient in GSTR2A or 2B in both. But 2B is important, getting auto-populated for availing credit. One of the conditions under section 16, subsection 2 for availing credit. So how to do that? There are a lot of disputes. Disputes are wide. So we are going to discuss these components in a brief terms today, not in detail part, but what recommendation and what is being considered. Can you read this paragraph? They are saying that council had took a note of agenda on enhancement being made to the existing GST return architecture. These enhancements include reverse charge RCM ledger, and very recently got introduced. What is that RCM ledger? That if you are liable for RCM, your liability is being shown in table 3.1D of GSTR 3B, and corresponding credit is being taken in table 4A 3. First is import of goods, import of services, then the credit other than import of goods and other than services. So that should be match. And that is what they're referring to. An input tax credit reclaim ledger. Some credit you reverse. For an example that you have reversed some credit which would be reclaimed later, depending on the condition satisfied. Like when you're reversing credit, when you fails to pay, recipient fails to pay within 180 days from date of invoice. But you will reclaim the same once you pay the amount to the supplier. So that reclaim figure comes in table 4B2 of GSTR 3B, and corresponding credit which you avail at a future date in 4D1. So there's a reference of 4A5, 4B2, and 4D1 of GSTR 3B. So these are the mechanisms which is being provided, and I hope you have taken attention on those changes. Now the important one which I was referring to, invoice management system. Very first time ever since the introduction of GST, July 1, 2017. This mechanism is being provided on GST portal. But what is this mechanism? Listen first that one, and then I will give my observation. What they are saying, that taxpayer would be given opportunity to declare their opening balance for these ledgers by 31st October 2024. IMS, Invoice Management System, will allow the taxpayer, so the recipient of goods or services, would be allowed to accept, reject, or to keep the invoices pending. So accept, reject, and pending for the purpose of availment of ITC. You'd be thinking, what is this I'm referring to? I will explain by way of an example also. This will be an optional facility for taxpayer, optional, to reduce errors in claiming ITC and improve the reconciliation. So they're saying it is going to be optional facility. This is expected to reduce notices issued on account of ITC mismatch in the return. Now, listen very carefully so that you can understand all these three terms: accept, pending, and reject. What is accept? Let's say I'm your supplier. I've supplied goods to you. I've raised the invoice shown in my GSTR 1 or 1A, which is getting auto-populated for you in your 2B. So as per 2B, you're availing credit in your GSTR 3B. If this invoice which is being raised by supplier and shown in GSTR 1 would be available on dashboard under invoice management system, you'd be having facility of accepted, so that it gets auto-populated in 3B and credit is matched. That is what they're referring to. Accept facility. That is what they're referring. And they're also saying that, okay, in case you have not accepted, then succeeding month, and there would be auto mechanism of deemed accepted if you're not rejecting or keeping it pending. That is what being explained. So there is an advisory also in this regard. Unless you do rejection or pending, it is deemed acceptance. So that is what they're referring. Now, what would be reject? Let's say I have raised invoice to Mr. A, but by default, I put your GST number. It is getting auto-populated in your GSTR 2B. It is not your invoice for availing credit. What you will do? Reject it. That is what they're saying. Reject it. You can't avail that credit, which is not available to you. And what is pending? I have raised the invoice in the month of September, but you are getting goods received in the month of October. Even though it is auto-populated in 2B for the month of September, but credit is available only when goods are being received in the month of October. So keep it pending. That is what this 3 event going to work. And detailed advisory is being issued for this invoice management system. So we will discuss with a separate video, but I've tried to explain in a brief context that what is this 3 facilities enhancement which is being made to existing GST return architecture. Having said that, now I'm moving to the pointer, 2 more pointer, and then we will reach to the conclusion part. So second last, changes and clarification in GST tax rates. First, they are picking up goods. For namkeens and extruded, expanded savory food products falling under HSN 1905-9030 to be reduced from 18% to 12%. Applicable prospectively. So just keep to your mind, applicable prospectively. GST rate of 5% will continue on unfried or uncooked snacks pallets by whatever name called. Manufactured through process of extrusion. This is on namkeens. Cancer drugs. Custom duty is being reduced in this budget, Union Budget 2024. Now they are reducing GST rate on cancer drugs from 12% to 5%. So for affordability for the cancer treatment. Metal scrap, one of the subject matter of big dispute in trade industry for this particular sector. Why? Lot of dispute pertaining to ITC, input tax credit, and disputed on multiple counts. So what is being recommended? Let me discuss this component and then I will give my observation to you. RCM is going to be introduced. RCM means what? I'm your supplier and you all are my buyer. You need to pay GST and a reverse charge. For what? When I'm not registered in GST, I'm unregistered, and you're procuring metal scrap from me. So supply of metal scrap by unregistered supplier to registered recipient. Registered recipient will pay GST under reverse charge method. So this is going to be notified under Section 9, subsection 4 of CGST Act. This is what they're saying. But further what they are saying in recommendation, it is worth reading. They are saying supply of metal scrap by unregistered person, means unregistered supplier, to a registered person, which you are. You are a buyer, you are registered. Provided that supplier shall take the registration. Please read this line carefully. Provided that supplier shall take registration as and when it crosses threshold limit. What is threshold limit? 20 lakh rupees aggregate turnover. 40 lakh rupees when you are exclusively into intra-state supply of goods. That is what the aggregate turnover limit. If I cross this limit, by default, I need to take registration. Supplier need to take registration. By default, he can't supply as an unregistered supplier. But still, they are making it clear that only this provision RCM applicable when being a registered recipient, you are procuring metal scrap from unregistered supplier. Now, my question is, this unregistered supplier is below the threshold amount aggregate turnover. You are paying RCM under reverse charge, understandable. But how being a recipient, you will come to know that this supplier has crossed the threshold limit and he has to take a registration. I hope you are getting my point, right? Do we have any window to cross-check? Because the supplier may be supplying to n numbers of recipients. So they are saying this RCM is applicable only when this supplier is unregistered because he is below the threshold limit. What happened? He continued to be unregistered even his turnover crosses that threshold limit. What is the mechanism? It is silent. So I'm just giving pointers which still need clarification. So this is the first point. And second, they're bringing the concept of TDS, tax deducted at source. And that too at the rate of 2% on supply of metal scrap by registered person in B2B supply. In simplistic manner, I'm registered supplier of metal scrap, supplying to registered recipient. Registered recipient, while making payment to the registered supplier, will deduct TDS at the rate of 2%. Why it is being done? To, to control and check fake ITC, fake input tax credit. Some pointers, and I'm just giving these pointers for food for thought. In this particular industry, what is the problem, that being recipient, you're having invoice, you have received the metal scrap, there's the eBay bill, there is LR copy, goods receipts are being evidenced through pictures and everything. Everything is available. It is coming in your 2A, 2B. Supplier is also filing 1 and 3B. Everything is there. Being recipient, you're complying with everything. But what is the dispute in the trade age today? The credit to the recipient is being denied on the pretext either supplier is not existing, first. Second, supplier has taken credit from his preceding supplier, and preceding supplier has not paid the GST liability, and that credit is flowing in a supply chain. Even this 2% TDS, which is being deducted, which as per my observation, what happened? This TDS which is getting deducted, of course, it is going to be credited in your e-cash ledger. But for timing, there would be accumulation, working capital block. It could have been reduced. Second, even if TDS deducted, how you're going to help me out in this particular trade? When dispute is there, supplier is non-existent, but otherwise complying all the provision. Let's say TDS deducted, and after 2 years, 3 years, you come back, which was done in this particular industry. 2017 GST, July 1, got started. And today dispute comes, supplier has raised everything, filed 1 and 3B, all the documentation in place with the recipient. Just on pretext supplier is not existent, credit is being denied. How this buyer at this point of time going to prove this supplier was existing during that intervening time period? So this point of non-existent, even though TDS, let's assume TDS got deducted in the past, his existence, how to? So those are a work in progress. It is done in a progressive manner, but for the past period, still dispute lies. And if preceding supplier has not paid the liability, and that is flowing in a supply chain to the immediate supplier, and immediate supplier is giving all the documentation, and you are genuine and bona fide buyer, you can't check anything beyond immediate supplier. GSTN portal is not giving any window. How this is going to be resolved? So we are looking for solution of those litigation. But nevertheless, this is one of the recommendation for metal scrap industry. Roof mounted package unit, air conditioning machine for railways. Now they are saying that this would be 28%, and they are going to clarify. Car and motorcycle seat, now uniformly now going to be taxable at 28%. So car seat going to be at parity with the seats of motorcycle, 28%. Coming to the service sector, lot of hue and cry that GST rate either going to be reduced or some benefit going to be provided for the life and health insurance, right? What GST Council has done, they have constituted group of ministers to holistically look into the issues pertaining to GST on the life insurance and health insurance. And group of ministers of member states are being mentioned, and they are going to submit the report by October 2024, by the end. And November, Honorable Finance Minister has said the next GST Council meeting going to happen, 55th GST Council meeting. So this issue is being parked for the report to be submitted by a group of ministers, GST rate on life insurance and health insurance. Transportation of passengers by helicopter. They are going to notify GST rate 5%. When such services are being provided on seat sharing basis, and they are going to regularize for the past period if dispute persists on as-is, where-is basis. And this is, a big disputed item. So as-is, where-is basis means if if you are under litigation, maybe you are being demanded 18%, and you are saying, no, it is 5% leviable. Under litigation, you will get relief. But those who have paid the taxes, they will not be refunded. So this is what as where basis, but regularize and clarification. But charter of helicopter, which is not on seat sharing basis, will continue to attract 18% GST rate. Flying training course, they are going to clarify that are going to be exempted from levy of GST, provided it is being done by approved flying training courses conducted by DGCA. Supply of research and development services, big hue and cry. You have seen recently so-called notices of hefty amount is being issued to IIT for undertaking research and development services. As per interpretation, these so-called notices are being issued, the GST leviable, and this is the big subject matter of dispute. But nevertheless, now GST Council in 54th GST Council meeting, they have recommended. What they have recommended, they are going to exempt supply of research and development services either by government entity or a research association, university, college, or other institution notified under clause Roman 2 or Roman 3 of subsection 1 of section 35 of Income Tax Act 1961, either using government or private grant. So what was the issue? Let me first tell you so that you get a brief background. These institutions were getting a grant for undertaking research and development services. Question was whether GST leviable. And it was disputed on majorly, there is no quid pro quo. Because government grant given to the institution, they are only undertaking research and development, assignment services for general public, for the benefit. It is going to help the general public. It is for sovereignty function. Maybe there are lot many, assignment, lot many, research work is being undertaken for the wider, advantage, and which is going to help to the general public. So there's no quid pro quo. But now, Honorable Finance Minister during the press conference has said whether there is quid pro quo or no quid pro quo, no GST exempted on research and development services. If it is being undertaken by these institutions, and this grant either coming from the government side or from the private side, both are going to be exempted. Well done. Second line, past demand is going to be regularized as its wherage basis. Simple. If you are under litigation, you are being relieved. Nothing will fall back on your head. But if you have paid the taxes, then you will not be refunded. I'm asking one simple question. When there is no quid pro quo, no GST, no supply. If there's no GST, if GST being paid, can you really collect that GST? Will it not be termed without authority of law in terms of Article 265 to the Constitution of India? And why this? I am always questioning myself that compliant taxpayer versus non-compliant taxpayer. You're regularizing, well done, interpretation. But question comes, why such dispute when those disputes are so widely understood? But nevertheless, this is the subject matter for different level of discussion. So I'm just pausing myself, not extending my discussion. But this is again If it is exempted, you can't levy GST. If it is GST paid for some either or region, can you really keep this money? Will it not be without authority of law in terms of Article 265 to the Constitution of India? I'm saying that this is another subject matter boiling up for the litigation reaching to the Supreme Court. Nevertheless, now they're saying if these institutions are registered under clause Roman 2 and Roman 3 of subsection 1 of section 35 of Income Tax Act. So you need to really look at this section 35 subsection 1 Roman 2. And Roman 2 is saying that they are going to provide deduction for such contribution in respect of expenditure on scientific research, an amount equal to be 1 and 1.5 times of any sum paid to research association, which has its object undertaking of scientific research, or to a university, college, other institution to be used for scientific research. I'm only highlighting attention that whenever we are saying that such university, college, other institution, then they must be notified under clauses Roman 2 and Roman 3 of section 35 subsection 1 of IT Act. So you have to really look at whether they are enjoying this benefit or not. If not, then again, another way to look at this transaction. Preferential location charges. In construction industry, you are a buyer, I'm your builder. When I'm undertaking construction services, I also provide preferential location charges. Let's say you're taking flat on first floor, I will charge some extra money from you. Now, question was, if this money which is being taken towards PLC, what is GST rate going to be applicable? Is it at par with the construction services? If it is at par with the construction services, then corresponding rate gets reduced. Dispute which was existing, that field formation was saying, no, PLC is something different. That is not construction services, and that would be chargeable to 18%. That is what they were saying. But now GST Council says that they are going to clarify that PLC paid along with the consideration for construction services of residential or commercial or industrial complex before issuance of completion certificate forms part of composite supply. And construction being principal supply, so PLC will be charged as per the construction services. Affordable housing, non-affordable housing, whatever rate applicable, that rate going to be applicable considering PLC as a composite supply with the construction services. Only thing which is coming to my mind and which I was thinking, what happened if they are saying that this is being before completion certificate, right? Of course, GST leviable when any part of consideration or contract is being made before completion certificate. What happened after completion certificate? Whole consideration including PLC. I'm giving food for thought. Whole consideration including PLC is being paid after completion certificate. Whether GST leviable? Answer is simple no. Because PLC being considered composite with the construction, and if whole is being paid after completion certificate, Schedule 3, neither a supply of goods nor supply of services. Affiliation services. Now they're saying affiliation, they're going to clarify that affiliation services provided by educational board like CBSE are taxable. However, to exempt affiliation services provided by state and central education board, education councils, and other similarly placed bodies to government schools prospectively. They're saying it was taxable, but prospectively we will exempt whenever this affiliation is being given to the government school. The issue for the past period, 1/7/2017 till 17th of June 2021, going to be regularized as its wage basis. Simple. If you are paid, no refund. If you are litigating, you need not require to pay. And they are going to clarify that by way of circular, that affiliation services provided by universities to the constituent colleges are not covered within the ambit of exemption provided under notification number 12/2017 and GST rate 18% chargeable. Import of services by branch office. It is very much important when we talk about foreign airlines. DGGI has issued so many so-called notices, right? So specific benefit and specific clarification, recommendation. They're going to exempt import of services by the establishment of a foreign airlines. They are saying foreign airlines company from a related person or any of its establishment outside India. They are saying that will not be chargeable under reverse charge import of services when made without consideration. The council also recommend to regularize past period as its wage basis. So future exempted, past as its wage basis. If it is disputed, no need to payment of GST under reverse charge method. That is only specifically for foreign airlines company. One dispute which is coming to my mind and which you would be also thinking, what happened import of services for related parties transactions? Whether that is also having some clarity. So let's say I'm a company in India. And there's another company is outside India. We are related party. We can always assume HO and branch transaction also. So import of services transaction. There's an important circular. I'm drawing reference here. Circular number 210, dated 26 June 2024. The circular is clearly saying in case of import of services, the related party in India need to raise self-invoice to himself under section 31, subsection 3, clause F. And he can pick any value in that self-invoice would be deemed open market value. Only condition that recipient Indian party is eligible for full ITC. And in that circular, it is also being clarified if you have not raised self-invoice to yourself for the past period. And this circular 210 is also being referred with the circular number 199. So very interesting. For the past period, if you have not paid any liability, not raised any invoice, but otherwise recipient is eligible for full ITC. Had it been paid, it is a revenue neutral situation. You would have taken the credit being a recipient related party in India. Had it been paid, you would have taken credit, revenue neutral transaction. Then this circular is saying for the past period, if you have not raised the invoice, your valuation would be nil. Your valuation would be nil. I'm again repeating, for the past period. Only when recipient is eligible for full ITC in terms of Rule 28, Sub-Rule 1, second proviso of CGST rules. So that circular might help, but this recommendation which I'm discussing, it is helping all foreign airlines companies. Another big change, renting of commercial property. In GST, everything on forward charge. I'm a landlord. I'm having one commercial property I'm letting out to you, right? It is forward charge method. Now, only thing that if I'm a landlord and my aggregate turnover is less than 20 lakh rupees, I need not require to register. If I'm not registered and I'm letting out my commercial property to you, you are a registered recipient. What happened? GST leviable, forward charge. I'm not charging GST, being I'm not registered in GST. But now you would be recalling that the change which was brought from 18th July 2022, that renting of residential immovable property by unregistered person, unregistered supplier to registered recipient was made liable for GST and a reverse charge. Being recipient, registered recipient, you will discharge GST and a reverse charge from 18 July 2022. It was meant for residential. Now they are making it with commercial. So even unregistered supplier supplying a renting of immovable property, which is commercial property, to registered recipient, then registered recipient will discharge the GST under reverse charge method at parity, which was for residential accommodation from 18 July 2022. Another clarification, ancillary and intermediate services provided by GTA. Sometime we have seen at the field formation that lot of ancillary and intermediate services provided by GTA, Goods Transport Agency. And at the field level, what is the dispute? The department is saying that these ancillary and intermediate services are not GTA services, So that is the dispute they are saying. And what kind of, ancillary? Loading, unloading, packing, unpacking, transshipment, temporary warehousing, etc. They're saying, no, it is not GTA. We will apply 18% GST rate. That's what the dispute. But now the recommendation, they are going to clarify that any ancillary or intermediate services are provided by GTA, Goods Transport Agency, while undertaking transportation of goods by road and issuing a consignment note. That will be considered as a composite supply and chargeable to GST as applicable on GTA, laudable one. So this is what they have explained, composite supply. And further, they are saying if such services are not provided in the course of transportation of goods. So if it is not in the course of transportation of goods, quite obvious, invoice separately, these are going to be taxable as they are provided other than GTA. That is what it is being explained. Now coming back to the two more items, and then I'm through with my all the recommendation of 54th GST Council meeting. So this on life and health insurance I've covered. The only thing which is left out, the future of compensation cess. You know that the government is collecting compensation cess, and they have made the provision that they will continue to collect till March 2026. What happened thereafter? Whether this cess, compensation cess will continue? Of course, it can't continue in the name of compensation cess. So let me tell you, they have formed a group of ministers. They will study the future of compensation cess, but I'm of the apprehension that this will continue in a different name, with a different procedure and mechanism. So it is not going to be relief, believe me. That is what my reading all about. Of course, by default, it is going to be closed by March 2026. It will continue thereafter by a different name, different process, different mechanism, different sharing between center and state. So this is what. So as a trade, industry and commerce, you would be looking that it is going to be done away with. To my mind, I'm having my own apprehension. No way. So this is on 54th GST Council meeting recommendation held on the 9th of September 2024. I've tried my best to discuss all the recommendation in detail. I got a lot of, messages today that my lot of viewers are waiting for this particular video, my, digest on these recommendations. I've tried my best to make it simple, lucid, and given my observation. You can always write back in the comment box given in this video with your observation, with your suggestions, and maybe some way forward which you think would be the wiser, so that everyone who is watching this video, they will get feel of it. Yes, these are the point, relevant one, important one. And I always say, when we all contribute together, sabka saath, sabka vikas, we learn in a better way. And that is how the best way to walk the talk. So thanking each one of you for watching this video. Stay in tune, but stay tuned means subscribe to the YouTube channel. Then only you will come to know. All the notification of my new videos will get notified to you. So that is how we can continue our journey of making GST good and simple tax. Thanks for watching. Stay tuned. Thank you very much.